What's happening, everybody? It's the Mortgage King, and as you know it, a question didn't come in, but a scenario came in, and I wanted to discuss it here in this video. As it comes in, you know, I make my video. I say that before every video. So again, all of this is just so that the masses can have more info and equip themselves with more information to sort of defend themselves in the mortgage maze, right? Because everybody has a mortgage, not everybody really understands a mortgage. Everybody wants a mortgage, they don't know how to get approved for a mortgage. A mortgage is something that almost everybody has or will have at some point in their life. And that's the whole purpose of this channel, man. It's just to equip you guys with information so that you can defend yourselves. But what came in today is a situation regarding condos. And so condos are typically more favored for first-time buyers, not just first-time buyers, but typically more first-time buyers. Of course, if it's not $1 million condo, but the prices on condos are typically less than that on a townhouse or a single-family home or what have you. So it always looks like a better option for first-time buyers in their minds. So just a few key points that I want to touch on with condos. And when I say we're going to touch on it with condos, I'm only talking about conventional loans. This is your Fannie Mae and Freddie Mac type of conventional loans where you have your 5% down or your 3% down. With these kind of condos, and we can discuss FHA condos or VA condos in a different video, but this one's geared specifically towards conventional loans and condos. But getting straight into it, with every loan that you get, the collateral, which is the asset, depending on your point of view, always has to qualify as well. So when someone's taking a mortgage application, yes, the lenders are looking to see how you specifically can qualify for a mortgage, but they're also going to look at the asset, which is the collateral, and make sure that that asset or collateral is up to par with their guidelines as well. So two things are happening when you apply for a mortgage. You're being approved, and also the collateral is being approved, right? So it has to be able to get insured. If it can't get insured, then the lenders aren't going to qualify that as suffice collateral. So getting right into it, every loan, the collateral goes through a specific qualification. What's different about condos is that it doesn't go through the same qualification process as a townhouse or as a single family home or as a 4-unit, dwelling, up to 4 units, 2 to 3 units. You got your duplex, your quadplex, and your triplexes. It goes through those have their own category of qualifying. And then when you get into your condos, these qualify a little different. And most of my first-time buyers need to know this information because the process can kind of get a little overwhelming sometimes. So with your normal process, right? So it goes through the normal process, except it goes through a little bit more steps. So with your normal process, when they're qualifying for property, they want to make sure the property is up to par. They're going to check the appraisal value. They're going to make sure that the overall structure is habitable, right? There's no holes in the roofs or things like that. Just to give an example. So it has to be able to pass an appraisal, right? When the appraiser goes in there and checks the value of the property, if there's a straight up hole in the wall, that's going to have to be addressed. If the garage door, for example, is hanging off the hinges, that has to be addressed. That all has to be fixed before the underwriter can pass off on it, because that's all going to be marked on the appraisal. If the electricity is not working, because the appraiser is going to check all of this. If they go in and the house is hot, it's just very hot in there, and they ask about the AC or what have you, all of the things have to be functioning. The home has to be habitable. That's any program. Now with condos go through that as well, except now with condos, they have to check so the lender's gonna give the HOA, the homeowners association that your condo resides in, they're gonna ask for a condo questionnaire form. Now on this form, it asks a ton of questions. This form wants to know if, for example, any part of the land is on leased land. Sometimes condos do that, where they have a recreational center or like a pool or something to that degree, the tennis court to the condominium is on leased land. So they want to know if it's on leased land or not. But regardless, I don't want to go through all the questions on the questionnaire, but the lender is going to submit a questionnaire to the HOA, and the HOA is going to answer those questions. If there's anything on there that doesn't fit the guidelines, then there's really no chances of that condo itself being financed with your regular 5 to 3% down conventional loans. Right. On top of that, they're going to want to make sure that the master insurance policy is kept up to the guidelines of Fannie Mae and Freddie Mac, which are the conventional loans. So they're going to ask for the master insurance policy. They're going to review it. They're going to check what type of coverage it has. Everything dealing with the master insurance, it has to be up to their guidelines as well. I'm missing one. We have a condo questionnaire, master insurance policy, and of course the reserves. They're going to check the condo budget. Now, this one that I'm mentioning is typically the biggest reason why a condo wouldn't pass for a regular conventional loan financing. So I would recommend, if you're working to purchase a condo, first check all of the things that I'm mentioning gets checked during your purchase process. So there's really no way of knowing if the condo questionnaire is going to come back or if the master insurance policy is where it needs to be. But one thing that you can do, depending on the condominium, of course, is get your hands on the condo budget for the year. So in our case, it's 2024. I would ask for the condo budget for 2024. And you can analyze the budget or give it to your lender, and your lender would let you know if this condo has enough reserves, condo reserves, for a purchase using 5% down or 3% down on your conventional loan. Now, the condo reserves is typically the biggest issue that always comes up. If there is going to be an issue with your condo purchase using a conventional loan with 5 to 3% down, it's probably going to be the condo budget not having enough reserves. So it's wise to get a copy of that budget before you even start the process and just check that out. And typically, if the condo does have enough reserves on their budget, then everything else most likely is going to fall into place. Not all the time though. During the process, the questionnaire still has to come back and have all the right boxes checked, so to speak, and the master insurance policy also has to be up to the codes of what Fannie Mae and Freddie Mac have for your 5 to 3% down. But that's something that first-time buyers should know. Sometimes the process can get a little daunting as you're shopping for a home. You might get those reserves back and your lender says, hey, this one doesn't have enough reserves, and it's back to the house hunt again. Or maybe in some cases, those reserves do come back, you start the process, you're amped, you're ready for the process to close, and the condo questionnaire comes back and it just doesn't have the right boxes checked on the questionnaire for a Fannie Mae purchase, or even something with the insurance. Now that's a possibility that could happen, and this video is just so that you can have the right expectations when home hunting for a condo. Because again, condos do have really good prices. When you're doing your pre-approval, hopefully your lender's going over monthly payments with you, down payments, closing costs, and typically first-time buyers look at those prices on condos as opposed to townhouses or single-family homes, and they say, hey, that really fits my budget as a first-time buyer. So it's more attractive, and I would agree with you. It most likely is attractive, and it's something that you can handle, including the HOA fee. Everything together is just a lot better. So you go that route. This is just something to expect. So it's not impossible to buy condos. We do condos all the time. Just have the right expectations. It's not your lender or your loan officer or your mortgage broker that's making it hard. It just you have to have really good condo reserves and a condo questionnaire and insurance. That's just part of the guidelines. Now, most of the time, actually even going through the process of making sure your condo has reserves, or making sure the condo questionnaire comes back, or the master insurance policy is within the guidelines of what Fannie Mae and Freddie Mac want for your conventional loans, sometimes that kind of helps you in a sense of you might be dodging a bullet regarding your exit strategy. So it might seem like a bummer going in. This is just, of course, my professional opinion, It might seem like a bummer going in if you can't find the right condo, but typically how you should think about it is wire your mind to know that whenever a condo doesn't work, you're kind of dodging a bullet, because at some point you're going to want to sell this property or refinance this property. But in most cases, people want to sell their first property, use the funds, not have that debt on their credit at all, and purchase a bigger and better home. And when they do that, their exit strategy kind of gets messed with. So for example, if you're trying to buy a condo and it's not up to par with your 3% downs, and you use an alternative financing and you get it done, you come in with 25% down or 20% down or what have you, and you use a non-qualified mortgage. Now you purchased a condo, you've been in there 2-3 years, and you're ready to buy a bigger, better house and sell this one. Majority of your buyers are going to be using that 5% down on a conventional loan, or that 3% down on the conventional loan, or what have you. So sometimes while trying to buy these condos, if it doesn't meet the Fannie Mae or Freddie Mac guidelines, it's kind of a blessing in disguise, because when you go to sell your property, most of your buyers who are going to want to buy the condo that you've renovated, you've been living in for the past 2 years, 2 to 3 years, they're probably going to be using financing with 5% down, and it's going to be an easy sale. Not most of the people who are buying a condo are going to be using non-qualified mortgages, non-QM loans, or hard money, unless it's like an investor. But majority of your buyers that are going to be making offers are going to be using those 5% downs. So you want to have it already to be compatible with Fannie Mae or Freddie Mac when it's time to exit. So that's something to think about. Whenever something doesn't match up, it's kind of a blessing in disguise. Also, if a condominium really doesn't have reserves, that's also a blessing in disguise too. You probably don't want to deal with that kind of condo association. You know, if the gate breaks in the front, or if the roof needs repairs to the entire condominium, and they don't have these reserves in store, that's just going to be a headache. You probably don't want to live in a condominium like that. Or the elevator breaks, or it takes forever for them to fix the elevator because they're not dealing with a lot of reserves. It can get messy. So whenever you're shopping for the condo, I'm just kind of saying this so you can keep your head up, stay motivated, and buy your first home. When you're going through that process, don't get bummed out. You're just dodging bullets. All right, it's part of the process. And set the right expectation, because that's what it takes when you're buying a condo. So did I touch on all the points? I think I did. If I didn't, I might have to make another video. But for the most part, that's pretty much everything that I wanted to get out, man. And I hope you guys find this information of value. It's the Mortgage King, so you know who said it.